how do you choose a mutual fund? Like that is such a simple question, and yet there is no answer. Can you help us there?
No, we often get asked, which is your best scheme? And when I ask, why do you want to know my best scheme, it surprises people because, it's a process of financial planning. I think the first starts with asking yourself, why do you want to invest? When you fix your investment goal, that's where the story starts. And from there, what we kind of figure based on the return generation, you can then form a portfolio which is called asset allocation. It's very difficult to assess the risk profile of a person in the beginning because the risk profile changes and life also teaches you your risk profile. When I was 25, I was something. After marriage, I was something. After my son, I was something. Now when I'm accumulating for my retirement, I'm a different risk profile. And the market movement also teaches you. So risk profile comes over a period of time, but you can start by gauging your risk profile. And after that comes your scheme selection. I mean, if you're going to make it number one, then you're making the wrong, completely getting the objective of your scheme wrong. So based on your return or your goal, forms the risk, forms the scheme selection. And that's where if you are looking at 10 to 12%, your portfolio will be very different from if what you're looking at 14 to 15%. And the risks will also change. But to start with, I think you should start with the core market. I feel the investment will now form a pyramid, the type of investors. At the bottom of the pyramid, when you start, you must experience the market. Either in the form of core active funds, which are the large cap or the flexi caps, or you have the core market cap indices, the Nifty 50, Next 50 or the Nifty passives. You can start from there either in the index form or in the ETF form, choice be yours. But that's where you start from. As you start understanding the volatility of the market, you get a little bit into the expertise, which is core active funds, like you can venture into mid caps or thematics or small caps as you please. And here also on the passive side, the factors are providing beautiful opportunities of rule-based investing on the same active logic. But after that, when you graduate a little bit more, then you can go into the more progressed products like AIF, PMS, and now the mutual fund will also give you a new asset class in that space. But initially form your portfolio on the core side of the market. Start owning larger companies. Learn the volatility of the market. Always remember that in volatility lies the opportunity. So don't be afraid of volatility. That's when fund managers play. If you can choose it yourself, fantastic. Otherwise, at the beginning, I would definitely look at going through a distributor or an advisor. And form your core portfolio. Forming the core portfolio is easy. But the main part happens in the review. If you're on track or not, it has to be reviewed at a particular interval. I would be happy to do it every 3 years, but typically I do it every year.